Welcome back to the channel, everybody. I am Mick Alfany. So it seems that lately everything is starting to heat up. We're getting a lot of information lately. This is very good. The last video, if you didn't see that video, it was very good. We were speaking about QR codes and offline payments and who's at the forefront of that right now. Ripple via XRP. The XRPL has the capabilities and rolled out the capabilities of offline QR code payments. QR codes are going to be the wave of the future. You already see them utilizing it in some stores. It's just nobody, the people just don't use it in mass just yet. But I've seen it personally where you can make payments to some of these stores with QR code payment, with a QR code, right? They're going to be doing that with everything. They need to ensure that whether systems are up and running or down, especially coming into tumultuous and chaotic times where there's going to be a lot of cyber attacks and systems can get shut down, that does not stop the flow of capital and data. That's what they want. So it's going to be implemented en masse. Now, as you've seen, and we've covered a bevy of articles over the last year or two, massive amount of banks have been shut down by attacks, so-called security flaws, right? That's what they say. But because of their antiquated and flawed system, it completely stops their customers from interacting with the system, accessing money. They're not going to allow that. That's where offline payments come in handy. Now, the article we addressed in the last video was from Faster Payments Council, which we have a few of our Ripple members on their board, high ranking. Okay. This one here, this is how serious they are. This article here is from the IMF, which, if you haven't seen my last few videos, we also, XRP, Ripple community, have a member on the IMF's, the International Monetary Fund's, advisory board. Not only is it the advisory board, but it's called the High Advisory Board. Keep that in mind when we read this here. This is from IMF.org, and the article goes as such. In many regions, internet-free access may be a make or break feature for central bank digital currencies. This is why Ripple jumped on top of this so early, to make sure there's no flaws, that we have everything that the central banks need. We're going to take a lot of that central bank money if everything continues to go according to plan. Just my humble opinion, not financial advice. Don't worry, we're going to get to an XLM article. They're starting to heat up. Stellar, keep doing a good job. I'm getting excited a little bit. Maybe not a little bit. I'm getting very excited, actually. But we're going to get to that in a minute. Let's continue on here. And it says, as the world's central banks rush to develop digital currencies, almost all the research and trials focus on internet-based technology. What will happen when the web goes down? Exactly what I was talking about. Not just the web, but what happens when systems go down? And of course, their systems are internet-based. It says, and trials... It says, what will happen when the web goes down in a war? I was just saying the exact same thing. Now, I saw the headline of this. I didn't read all the way through it. I like to sometimes do articles fresh. It keeps things interesting. But they're saying the exact same thing. I think all logical minds, I think we're on the same page. What will happen when the web goes down in a war or a natural disaster? Now, let me pause right there. Now, when they say war, I know people are thinking conventional war, and I know there's some conventional wars going on right now, but also keep in mind, we have to think with 360 degrees of mind. We have to perceive, at least, not think. We have to perceive with 360 degrees of mind at all times. So you have conventional war, but on the horizon, what's going to be the biggest threat? Cyber warfare. You've already seen it. What happened over there when you had one country, I'm going to try to be careful with this because YouTube is very, very sensitive. You had one country didn't want this politician from another country to go over to this other place. Then what happened right after? There were mass cyber attacks going on. So cyber warfare is going to be major. That's what they're trying to prep for. So that doesn't stop the flow of value. It says, or natural disaster. You have that as well, but that's completely, that's an entire video by itself. It says, and what about the 75%? Think about this number. And what about the 75% of the world's adult low-income population that doesn't even have internet access? 75%. Now, everything else, just blur that out for a moment. So what they're saying here is that they don't have access. Not the people, the banks. They understand that institutions, large financial institutions, are always self-centered. They're here to make a profit. They're here for power. Make no mistake about it. They're not thinking about the small people like a hero would. They want to help. That's just the guise that they wear. But keeping that in mind, what they're saying here, if we keep that in mind, is that they don't have access to about 75% of the world's capital. At least there is no continuity. It's not continuous. 75%. And that's what I've been saying that we, the bank coin holders, have access to. XLM holders via Stellar and IBM and Lightnet and all these other entities that's building on XLM. XRP via Ripple and anyone else who builds on them. Algorand. We have access to these corridors. Not only that, we've been building heavily over the last few years in those corridors, and we can access that money. That's major. Another reason that they have to congeal with us. They don't want us building up too much wealth without them, that is, right? They want in on it, which is smart on their part as business people. 75%. That's mind blowing. But let's continue on here. The future of offline CBDCs may lie in the technological past. I don't agree with that whatsoever. But let's just read this little tidbit here because it's going to be interesting. It says offline digital payments systems could verify availability of funds and validate transactions without the need to check in with an online ledger. They could use old tech, non-internet driven mobile phones or something like a souped up stored value card. Now, I ask you, what was it that they were building on the XRPL? Have you been doing your research? We are going to dominate. Keep in mind, like I said, we have members on their advisory board at the IMF and members on the Faster Payments Council. And these are the individuals who have been putting out this information as of late. The Bank of Canada is exploring such universal access devices intended to incorporate attributes of cash and prevent the interruption of digital transactions in the case of an infrastructure failure. I want to say this also. There is a great chance that there could be mass legacy system infrastructure failures. I say that because we've seen so many banks have to shut down, their systems go offline, them get hacked. There's been a massive amount of problems, and these have just been small symptoms. And it's not beyond, I think, reason that there could be a mass failure given all of the instability of the world right now. Of course, a lot of that instability is self-inflicted, because of the governments and the central banks not really having good policies across the board, too much internal fighting and such like that. So I think that's another reason why they're trying to prepare. They want to survive, just like everyone else. They want to survive what's to come. And I think there's something major coming, the fall of the old system, so to speak. But these individuals are not completely ignorant. So they understand that they need to learn from the past. And many empires have fallen. They want to survive that fall. There have been others when empires have fallen as well that have survived and lingered over into the new systems. I think the same thing will happen again. So they want to survive this. This is why they're preparing now. So that no matter what happens, they can continue to exist. Or at least a portion of these systems can continue to exist. Now, it says here, intended to incorporate attributes of cash and prevent the interruption of digital transactions in case of infrastructure failure. In its exploratory work on a digital euro, the European Central Bank is considering offline functionality. So they're all on the same page. The IMF, the ECB, the Faster Payments Council. So, think about that for a moment. So the entirety of the West, pretty much, is saying that they're all looking into offline QR code style payments all at the same time. Faster Payments Council document was released, yesterday or the day before? This was released about a week or two ago, something like that. Very close together. They're telling the people something, but the people are not going to listen. And it's a shame because the regular people need to prepare in the same ways. They need to prepare in the same ways. But only a few are going to see what's coming. There's not much we can do about that. But this means a lot of money will be continuously flowing through the new financial system is exactly what it means. And that nothing will be able to stop the flow of that value. So now, let's go on here. I want to go on to a little bit of Stellar news because they're doing major things as of late. It's been great news coming out lately. Now, before we get into this article, keep in mind that every transaction on the Stellar blockchain is handled by Lumens and XLM. Unless they change that, they're going to have to let us know. But as of now, that's what's stated on their website. So XLM is used for transaction fees, also to cause enough friction to keep out quote unquote bad actors, right? Correct? So, and not only that, every account must hold a minimum of lumens, correct? Now keep that in mind when we're talking about banks using XLM or NBFIs, non-banking financial institutions, which I believe that's what this is. This is from stellar.org. FunBNK, I'm just going to say FunBank. FunBank provides an on-ramp for mobile-first, cash-based economies using prepaid airtime and USDC on Stellar. This is major. This is very, very good development. I'm happy to see it. It says FunBank is a fintech company enabling frictionless financial on-ramp for emerging markets, leveraging the existing network of mobile phone accounts. Anyone with a prepaid mobile SIM card can now have access to the global digital economy. They say time is money, and time is literally money in Africa. So this is taking place in Africa. So I told you, everyone's getting deep in Africa. You even see the IMF trying to make sure they keep their relationship good with Africa. Why? Because Africa is going to be exploding. There's going to be a ton of value coming out of there. They're going to be thriving. And who wouldn't want a piece of that money? We're telling the people. Are the people listening? We'll see. Specifically airtime with talk, text, and data. Let's skip past a little bit of this here. Let's scroll down here. It says, quote, the biggest friction in the markets we go after is not necessarily self-custody. It is the high transaction costs. This is another reason a lot of people are going to jump on top of this. A lot of businesses are going to jump on top of this. And there's going to be an explosion of businesses in Africa over the next 10 years, in my humble opinion. So we think about the short-term money, but we also have to think about the long-term money. Sometimes people only think in one way. We can't do that. So sometimes when I talk about 10 to 15 years, when I'm speaking about these so-called developing nations, continents, then people start to say to themselves, well, 10 to 15 years, I don't want to wait. That's just the long-term money. There's short-term money in there as well. There's different degrees of these floods and tsunamis that are going to be coming, and it's all good. What that means is that, theoretically speaking, with these assets, you'll be able to make money over the long term. And they'll be growing as the companies that utilize them grow, as the countries that utilize them grow, they also will grow, which means that the capital that flows through them will also grow. That's a great thing. Now, let's continue on here. It says, it is the high transaction cost of moving money around. Since people are very price sensitive to the cost of airtime, Stellar is a great partner to us from that standpoint. They give you a little bit of stats here. It says 250,000 users. $10 million gross merchandise value. That's only going to grow over time, obviously. Listen, these are seeds that are planted. Then you have to water the seeds, and then they grow, right? That's what we're looking at. 12 countries of operation. FunBank has seen great appetite in its product. Africa is no stranger to crypto and digital assets, according to analytics from Chain Analysis. No region uses P2P platforms at a higher rate than African cryptocurrency users, as they account for 1.2% of all African transaction volume, indicating strong interest and facility with cryptocurrencies and crypto-related products. Now, keep this in mind. We've been seeing great activity and development, right? And ingraining ourselves in all of these different, developing areas just imagine once we have clarity in the United States and the bank coins can spread out and start, announcing some of the deals they have in the United States and in Europe, which brings us to a later article here. Let's go here. This is on cryptobriefing.com, and it goes as such. EU, European Union, to create new crypto regulator. Remember, I was saying before that for a lot of what they want to do, even carbon credits and carbon taxes, they can't handle that with the governmental agencies and bodies they have right now. They're going to have to create new regulatory bodies. Remember I said that? And now you here you see the EU doing just that. This is logical. EU to create new crypto regulator. The United States will have to do the same thing. They're trying to find a way to regulate, via CFTC. I hope they go with the CFTC. Then you have the SEC trying to take over crypto regulations. But truthfully, they need a new regulatory body that fully understands cryptocurrencies, that specializes in cryptocurrencies. And if the United States is not lazy, they'll do what the European Union is trying to do here and come up with a new regulatory body for fair regulations. This is really what they need. But let's just read a few of these key takeaways here. It says, first bullet point, the European Union is currently designing a sixth anti-money laundering authority, which will have the specific purpose of regulating the crypto industry. Obviously, they would have to specialize in understanding crypto before they could even do that, right? Correct? All right, next bullet point. This new regulatory body will likely decrease the possibility of jurisdictional arbitrage between different member states. That's very good. Next bullet point. The European Parliament recently voted in favor of strict anti-anonymity laws targeted at unhosted crypto wallets. That's very interesting there. That's going to be highly problematic. I don't know how they're going to pull that off. Privacy coins is all I have to say in retort to that. So here it says further EU regulations. The European Union is looking to create a new crypto regulatory body. According to new reporting, the EU is in the process of designing a sixth anti-money laundering. Okay, so they're reiterating what they said before. While previous anti-money laundering directives had merely established frameworks for the EU members to gather and share information, AMLD6 will reportedly be tasked with monitoring crypto service providers, especially those considered high risk. The regulator is therefore expected to reduce the opportunities for jurisdictional arbitrage within that zone. Another thing that they need to do, and that the people should push for, is to have some way that these regulatory bodies are held accountable for what they do, so that you don't have an SEC-like situation going on. I disagree with almost everything the SEC has done. And I think a lot of people feel that same way. And right now, there's no one to hold them accountable. The Congress is not doing it. Senate is not doing it. So you don't want that. So there needs to be a way to hold these individuals accountable when they seem to be going rogue. So that's what I would throw in there. But as you can see, more regulations are coming. Specialized regulatory bodies are now being put forward. OK, so now we'll go here and we'll end off with a little bit of quant news. OK, Quant has been doing a fantastic job. As I continue to be excited about Quant, I always like to say I believe that price is going to explode beyond belief. Quant definitely, in my humble opinion, it's not financial advice. Okay, it just doesn't mean that you need to go buy some Quant. Not at all. Like, you do what you want to do. All right. So this is not that kind of channel, but I believe Quant especially could change people's lives because of how high the price can go. And I don't think anybody can deny that price can go extremely high when you look at all of the different data. Look at how many banks are signed up to use Quant, circulating supply. And then people are going to be hoarding Quant. They're not going to be selling their Quant in the future time when that price starts getting high, because they know that holding it, and I believe they're probably going to have some sort of staking going on. Especially with companies that have to use Quant for transaction fees, they're going to be buying up a ton of Quant. And I think there's going to be a rush to do so because big money does not want pieces of an asset. They want an entirety of that asset. So they would prefer one Bitcoin over a piece of Bitcoin. You understand what I'm saying? It's just the mentality. It's the way that they think. So I do see Quant because, well, not because, but if it comes into short supply in the future, that price will explode. And Quant, QNT, the coin, is used for all transactions on Quant network. Keep that in mind. So it's going to be in constant flow with a high value. And it's short in supply. There's not that many Quant. So I like to keep that in mind. So this article is titled, "A Sound Regulatory Approach for Digital Assets." New rules like the UK's Financial Services and Markets Bill and the EU's Crypto Assets Regulation, MiCA, should be welcome, argues Quant's founder and CEO Gilbert Verdian. Now, when I see this, and look how many regulations the EU has been putting out lately, and they're not done. Now, why? The reason why companies like Quant, Ripple, Stellar are always excited. Algorand are excited about these types of regulations. A lot of them are very fair regulations. Some of them are ridiculous, like the one aspect of that page that we just read. But most of them are pretty fair so far. The reason why they get excited is because they understand that when this market is regulated, when crypto is regulated, all of that legacy money that's on the side, and there is a flood of money on the side. Once we can get regulations in, there is no stopping us. A lot of cryptos are going to take off like a rocket. Mark my words. A lot of the legacy system money has not even touched crypto just yet. Because they need that, they require that they're safe when they have these dealings and sign deals, memorandums of understanding. And they don't want a subpoena or lawsuit launched against them by regulatory bodies and such. They need regulations. So everybody understands this who is in the know. So we want regulations. We want these things to be regulated. And yes, the scam coins will go away. My goodness. Do you ever notice that when the markets are doing even the tiniest bit of good, a ton of new scam coins come out and rug pulls? Be careful, everyone. I've seen some crazy things as of late. Just be careful where you're putting your value and your money, okay? I mean, I can't tell you what to do, but I personally would be careful. But yes, they will go away. But what people are not taking into account is that the regulatory compliant crypto will explode. Almost nothing has happened yet. So we don't have, let's just take the bank coins, right? And let's just focus on them for a moment. We don't have regulatory clarity. Even with regulatory clarity, it's still going to take time for them to roll out various regulations, right? So you have the advent of regulatory clarity, then the actual rolling out of regulations, as you see, is happening piece by piece in the EU. That gives you an example, right? So it takes time. That we don't have all the infrastructures up and running just yet. That's number 3. So we haven't seen any of the bank coins up and running fully just yet to their maximum capacity. So that hasn't even happened yet. With all of that, we're still doing pretty good. We're still doing, the setup is beautiful. We're still doing deals. We're still setting up corridors, priming corridors. We're still bringing in more banks. Look at what we're doing without all of that. Now, just imagine when we have that. Now, not only that, once the legacy money steps in, prices are going to go up. Now, companies, a lot of companies, they liquidate their holdings so that they can fund different projects. Imagine how many more projects they'll be able to fund. I think this is the very reason why, like I said, Ripple was interested in buying the Celsius assets. There's a little bit more capital that you can play with for projects. When legacy money steps in, activity is going to explode. Expansion is going to explode, just in my humble opinion. So this is why they're very excited about things like this. Then they give you an example of the increases. Now, it says over the last 5 years, investment in cryptocurrency increased from $100 billion to a market cap of $3 trillion in November 2021. In 5 years. Think about that. And this is without regulatory clarity. And this is without all the banks stepping in. Just imagine what happens when the banks step in. Where does that, for people that are interested in market cap, just imagine where that money goes when all the banks step in, and they haven't yet. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.